Okay, good morning, everybody. It is Tuesday, March 1st, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. Just a few minutes ago, I went ahead and took a short right at our orange line. You guys know how important that level works over and over again. In fact, in the overnight session before the level even plotted, you can see how relevant that yellow line was. It came down, held it in the beginning of the Globex session, continued to hold it, got a little probe through, held it on this major pullback to that level, broke below it, came up to the back end and sold off from there. And as we came up here, just a few minutes ago, I went ahead with some bearish divergences here with my 1 minute, my 512. With that line being so relevant, went ahead and took it short right into VWAP there. It looked like we actually were going to go ahead and take a nice push right off of there, but looks like we're continuing to travel lower here. And yesterday was pretty quiet in the room just because the market was a little bit wonky. We were expecting a push all the way up to that 80.50 to fill the gap from basically the market. The expectation was the market was going to push and come up and fill the gap all the way up to 80.50. Of course, it there were a couple clues that I was getting that we might actually fail up top here. So I personally took some shorts, even though the expectation was for higher there. I saw some counter indications and thought I would be smarter than the market. And I did get some decent little scalps off these levels, but really I should have been getting long off the low end there to ride that puppy up. So that's just how it went. It was pretty quiet in the room. And let's just see here. Towards the end of the day, it looks like we came right up. We filled the gap. So 80.50 was up here. We had a good level that we marked here at 82 that you guys should be familiar with. And peaked just above that 82 level. Came up and it looks like at the end of the day, we just came back and retraced the morning's price action. And I guess the bulls ended up finding some strength for the continuation. And I want to just look here and point out that the market essentially came down and held the 50% retracement here of this whole push up. So from the low of the Globex session all the way to the high of the day, which was again just a few points above the gap, the market went ahead, came down, peaked just below the 50% there. In fact, tried to hold below it for just a little while and then ended up coming up. And notice where it held to the tick here, 50% of that leg right there, even came back, launched off and came right back to it. And again, that 50% level is essentially the magenta line you see there, and went ahead and held. So the area where the market held is not surprising from a fib retracement perspective. And again, that's why we use fibs every morning. So let's go ahead into today. Let's see. Just kind of looking at where we're holding from at the moment. Just want to see here. We are just, okay, not really a nice alignment as far as the fib goes, but still holding just around that 50 to 61, and again, right off of our orange line there. So let's go ahead and do our analysis. We're going to probably breeze through some of the higher time frames here because not much has changed. Let's take a look. So our quarterly, we have a new 3-month bar forming. That 3-month bar, a lot of time, so really not much to say other than the bearish situation off the all-time high that we've been watching for ever since this bar opened, 3 months before that. So back in November, December, we already had a little bit of a clue. So we don't really need to talk much about that. We got our new monthly bar forming, so a lot of time on the monthly chart for things to develop. Still looks exactly like yesterday's analysis. And our weekly, same thing as well. So if you want to scrutinize those higher time frames, just go back to Monday's pre-market. We kind of look at that stuff in more detail. And on the weekly, again, nothing really has changed there either. Just want to point out that 50% of last week was down here around 42, 46.50. Then the market seems to be basically holding right above that. So, and we have broken the high of last week. So there are some bullish clues that you could eke out of the chart right now. Again, holding above 50% of the last candle, and we've broken above it. So again, there's going to be a little bit of time here before we have a closed bar. So we'll come back and look at this at the end of the week. And coming down to our daily, the first thing I want to point out here is the daily is holding the 61.8 retracement of this leg. So this double top that we made again back up that 45.80 highs, I believe it was 86 and then came up to 85 here. The failure from 86 all the way down to the low at 0175 here, 61.8 of that leg is basically where we're sitting right now. That value, and I could mark it, I just didn't want to busy up the charts too much, but let's just go ahead and throw it up there. That is 44.01. So 61.8 of this whole sell-off is 44.01. The high of the overnight session, 43.99. 2 points in front of it. If we are going to fail from here and start pulling back, this would be a really good level to pull back from. Again, if you look back to the sell-off from the all-time high all the way down to that 42.1275 low, we held the 61.8 here, and remember that major swing low, and then came back, retested it, and sold off. So this could be, again, another situation. The market tries to retrace the violent sell-off, comes right into the 61.8 and fails. So that's a good area. On the daily, outside of that perspective, we did get that really nice bullish divergence that we talked about on the morning of the 24th there. And so far, as you can see, we're attempting to continue to follow through from there. And that's why I tell you, we can't ignore a daily signal. Sometimes it's just a little shallow pullback when you get a daily signal, but when that signal follows through, those can turn into, like for instance, that final bearish divergence back on January 4th turned into, let's just see, about a 700-point sell-off on the S&P. So you could make a little bit of money with that, I would say. So we need to be aware of these daily signals. And right now, there's really nothing from a divergence perspective off of the current highs. So I don't have a nice clear bearish signal on the daily up here, but we might see some stuff on the shorter time frames. But that's what I'm seeing right now. A nice bullish signal off of the lows at 41.0175. And don't really see much of a clue of exhaustion outside of the fact that yesterday basically traded within the price action from Friday. So we never really broke out, but we're starting to break out here in the overnight session this morning. So this might be a little bit of a clue that we're going to attempt to push higher here this morning. And again, 50% of yesterday down there at 43.06. We have not even come down to test that area. So staying up here and continuing to chug would be a clue for the bulls here this morning. Let's get down now to our intraday time frames and just take a look off the highs of the overnight session. We did get a nice bearish divergence on the 4-hour. Remember that the daily didn't have it, right? So it's not like we're getting a strong alignment so far, but the 4-hour is a pretty strong time frame and it's got that bearish signal. Off of the pullback, I am also noticing there could be a potential bullish divergence, to contend with the bearish signal off the high. And so I will watch this as we go into the open here. So if we don't end up breaching below the low here on the pullback of the overnight session, we might end up getting a nice clear bullish continuation pattern. Because you can see so far for the last 2 or 3 days, we're trying to continue to the upside. So I will be watching that. There's another thing I want to mention again from a Fibonacci perspective. The leg we were measuring and watching just maybe a week and a half ago, right over here, notice where we came up to. First of all, this leg down, again from that 45.86, 45.85 highs, that pullback down into from down to the lows here, bouncing off of our expected support zone down here. Notice we found a lot of trouble right off of all this stuff over here. So we tried to kind of push up, get through all that stuff. They just didn't have enough strength. You can see a lot of wicks up in there trying to get through, and then they fell from there. So when they fell from there, we had this new leg. So from those highs down to the new lows that we made here back, let's just say towards the end of February, like maybe the second to last week of February, we sold off from that point here around 44.86, came down and made this low around 42.50. We threw a fib on back at that point and probably made the comment that we were holding around the 38 to 50% retracement area. We also had all of this previous swing lows right here coming across, and interestingly enough, the market came up, found resistance right off those swing lows and started to sell off from there. Let me get rid of that now. Oops, that might have been the wrong one. Started selling off. Now I want to talk about something. We had a 27% extension here at 41.86 and the 61.8 here at 41.0550. I want you guys to take a look at what happened here and the low that we made. So let me see if I can get this. The low, remember 41.0175, was essentially the 61.8 extension of this leg that we were watching earlier. So again, this is just more proof that we need to rely on these fibs, rely on the extensions, because over and over again we see this type of relationships happen. So let's look at this morning. I'm going to get rid of that now. I think I made a pretty good case for why the extensions are important. And we're looking at the current leg up. So we've got the low at 0175 up to the overnight high that we just made, again at 43.99. So we want to be aware on the pullback here, the fact that the 38 retracement of the current leg is lining up right with this major resistance point right around 42.90. So 42.90, let's see if I can get that down to that 38 retracement level, is going to be important. And I don't have it marked again. Let me just go ahead and put it on inside left, I think was the one. Yeah. So 85.50 to 90. So a nice little 5-point pocket right there. That looks really nice. And I'm going to go ahead and, so 85 to 90, I just want to make sure I have it here on my 10-minute chart. And there it is. So there's a CP right there at 90. And then you can see the KP there at 85. And there happens to be a, let's see if I can move that, an eye level there just in front of the prediction point. So there's that. And we don't want to forget about that if the market pulls back. That might be an interesting area of support. A little bit deeper, that 42.50 level, I already have it marked here on my 10-minute. If I come down, and there's a lot of crap, but if you look here, there's like 2 eye levels, there's 2 prediction points. It's 50% of the leg up, and it's also the low from yesterday. So that whole little area right there, I'm going to bring this chart, this 4-hour back up. Right in here is also a very interesting level to pay attention to if the market pulls back this morning. All right, so if that starts coming down, we've got that 85 to 90. We've got this area right around 42.50. And then a little bit further down, that 61.8 brings us right into that 16.75. So right around 42.15-ish, give or take a point or two on each side. Right there is going to be interesting. And again, that's that 42.15 area. Let me just make sure on my charts here. We've got 13 and 20. We're going to highlight just this whole general major eye level and minor eye level here between basically 13 and 20. So those are some of the major levels below us that I want to pay attention to on a pullback. There's going to be minor levels in between. So the caveat is that there are still other levels in between these major areas of interest that could hold on a pullback, but these are the big ones. So I think that's what I could grab here from this 4-hour chart. If the market starts to rip out, and actually I want to talk about where we failed from here. So let's jump down to the 60-minute chart. This is just so good. In the overnight session here, And this is where I like to pat myself on the back as far as the levels that we've identified on the chart. So just want to point out that yesterday we mapped the levels out above the market, and we mapped out 43.98, and just about two points above it was our first expected area of resistance. So if you guys remember yesterday, we came in and this is what we saw, and we said if we can get through that 80.50 and get through the high of Friday, the first area of resistance is going to be 98 to about 4,400. Well, look what happened here in the overnight session. So yesterday we came up, we couldn't get through the high of Friday. We filled the gap and started pulling back. In the overnight session, what was the friggin' high of the overnight session, guys? What was the high? 43.99. Okay, we said the first resistance area was going to be 98 to 4,400. The market came to 99 and is pulling back right now. And look where the market just bounced. 43.2450. How relevant have these levels been week after week? It just blows me away. And now in the overnight session here, we pull back from 98, we bounced off 24, and now we're having trouble at 61. I just don't get it. How does this stuff work so well? So that's where we're at here. Kind of went off track there, just patted myself on the back on the levels. Let's look at what we got. We talked about the larger leg up, so let me redraw this, make sure this is all on here. And again, you have your 85, and remember we had it highlighted just about 85 to 90 here is our first zone. So that is looking good off that previous major resistance point. The 50% again is right here off the previous daily low. And as you can see, there are two major levels in between the two highlighted levels that we talked about on the 4-hour, and now we're seeing here on the 60-minute. There's always a possibility those could end up holding there, right? So it just is what it is. We've got two major eye levels here within 20 points of each other, and 50% of the leg happens to be right in between them, right at 42.50, where there's an alignment of a whole bunch of stuff. So basically every 10 points here, there's a possibility for a hold, and then you can see down into that 61.8 is that area that we highlighted just around 13 to 15, I said, give or take a few points on either side. And then after that, it's all the way down to that 89 area with that swing high back here at 97. Right? So this should be familiar from yesterday. Nothing really has changed below us, and nothing's changed above us because the market hasn't broken out from Friday's range. Oh shit, what did I just do there? Hopefully that was sitting there. So yesterday we came in, we mapped all the relevant levels above us and all the relevant levels below us. Those levels haven't changed much outside the fact that we pushed a little higher, so we had to redraw that fib and tighten up those areas of retracement. So basically everything above us from yesterday's pre-market is still there. And again, remember our first expected resistance area, 98 to 4,400, just held in the overnight session. So if we start pushing beyond that, again, we have that marked swing low, that dotted line there, just about 44.1075. And then a little bit further, we've got the eye level at 15, and it just is what it is. There's a few things in a close area there. If they do get up through that 44.15 and this swing low here at 22, remember 15 to 22 from yesterday, if we get through there, it's right up into 45, so a good 25 more points to the upside. And then it's up into 74.96 here. What else can we say? I don't think there's really much else to add here. So if the bulls continue to push, we want to be aware of these pockets of potential resistance above. Notice the 27 extension of this whole area is right up to 74, so that might be a good larger target if you get in long here this morning and it starts to chug higher. Just be aware there might be some trouble at some of these levels. On the pullback, remember we've already highlighted all the expected areas for bouncing, so I think we've kind of taken care of that. And if the market just falls out and the bottom drops out and it just starts to sell off even stronger, well, we've got our levels below us here, at least the most relevant targets below us here that we'll look at. So I think that wraps it up for this morning. Basically the same levels above and below us as yesterday. And, as far as betting on which direction the market's going to go, I'd rather just go with whatever they're doing and use our levels here. But let's take a look. Remember, the 4-hour might end up it has a bearish divergence off the overnight high, but might end up getting a bullish divergence on the pullback here. And on the 60-minute, the same thing. Bearish divergence from the overnight high right into our pocket there, and a pullback holding our next pocket here at 24 has a bullish divergence. So it's going to be a battle here. If the 4-hour and the 60-minute are showing the same clues off of the same tight range, then I would say we just need to see who wins out. If the low breaks here around 18 to 24, if that breaks, we're looking for targets down here. If we can get through the overnight high around 43.99, I'm looking for targets up at 15.45 and 74. All right, guys, have a great day. We'll be back here tomorrow.